Hi everyone, thanks for joining me again. Very much appreciate your company. And I'm going to talk today about the next candlestick, the next trading candlestick, because ultimately that's all that's important is, what is the next trading candlestick going to look like? And I'm going to demonstrate what you would aim for in predicting the next candlestick. And the reason that I'm doing this is because I want you to be successful. I want you to be successful, and I want to give you information that your brain can follow that makes you successful. That's what I'm here for. And that's what my purpose is in doing this. And, the next candlestick, we can make trading as complicated as we want to make it. And the more complicated we make it, the less easy that our brain finds it to follow. Human brain, it loves simplicity. And therefore, in order to follow a strategy effectively, needs to be simple. And that might sound like an impossibility in trading, but it's not. We keep things as simple as possible and the brain can follow it. And if you can follow a simple trading strategy effectively, then that's gold, isn't it? And so that's why I came up with the title, Ants Trading Gold. I hope you agree. Anyway, let's have a look at the charts and I'll show you what I'm talking about, okay?
So here you go. This is the perfect candlestick, right? Not because it's red, because it could be green from the same place, but it's perfect in its shape, right? Good long body, tiny tips, tiny tails on either end on this particular one. Okay, so that's the perfect candlestick. The shape, where it is in line with, these are the 8 and the 20 EMAs. And the reason that it's perfect is because there's a decisive big move in one direction and the tails on either end are small. Which means that within this candlestick, you've got everything that a trade requires. It's in the right place. You've got a stop, which would have been up here above the high of the tail. And you've got an entry, which is the previous close, which would have been here. And it's just in the river of value below the 20 EMA. So it's absolutely perfect. And if you entered short here, just as the candle went red and exited at the end of the candlestick, you'd have had a perfect trade. You risk that, let's say that's 1, would have been there up here, and your reward would have been down here. So you would have got 1, 2, 3, 4, 5, 6, about 6 or 7 to 1 reward to risk. Okay, so I think we can agree that if every trade we took had 6 or 7 to 1 reward to risk, we'd be in dreamland, wouldn't we? And this is not fiction. This is non-fiction. This is a reality and it is possible. You won't get on these type of trades 6, 7 to 1 every time. But I would take 2 to 1 and higher as being absolutely ideal for trading. Now, the reason that part of this candlestick is hidden is because I hid it. Right, so just look at this. The change within the candlestick was 857 points. So from here to here is 857 points. And the open was, you can see here, at an index figure of 56,344, so opened there. Price went up and made a little tail as it came back down. So the high was 56,470. So the open at 56,344 and the high at 56,470. So about 134 points of risk in there. The price closed at 55,486. 55,486. So if you went in at the open, actually you wouldn't have gone in at the open with my strategy. You would wait for a little bit of red to come in, so it'd be a bit lower than that, and got out just as the candlestick closed and the clock ticked over, and then you would have made nearly 850 points, roughly, something like that. So for a risk that is tiny and a reward like that, how many of those type of trades do you need to take to make a living from this trading? It sounds like a hypothetical question, but I just want to get you thinking about this, because this is the reason that you started trading, I guess, is for opportunities like this. Even if you went in and just traded $1 per point, that's $857, £857 at £1 a point. And that's worth your time, I would suggest, isn't it? Whatever the time scale was, and I can't remember now what it was either 1 or 5 minutes, this candlestick. I think it was a 1 minute candlestick. So in just 1 minute, it was 857 points profit. And the aim of the trade was to go in when the candlestick went red and get out at the end, irrespective of the fact that over the next few candlesticks, as you can see, price continued to go down, and if we'd have stayed in past the end here, then we would have, in theory, made more. But then you could always make more money in trading, and the thing is that with trading, you have to have set practices that you follow, because they are practices that time and time again will deliver what you want. So trading for a living, that's what you do. That's professionalism in trading. I hope you're getting this, guys. Yeah, because this knowledge is just, it is gold. So this was a candlestick that was on Nvidia. Nvidia, a US stock, produced this candlestick. And this strategy that I'm talking about, picking candlesticks, single candlesticks, waiting for an opportunity. And you can see, although you can't see the previous candlestick in full, you can see that it started up here, closed down here. So it started above the river of value, the 8 and the 20, made by the 8 and the 20 EMAs, and it closed below, and that is vital. Okay, and then price went back up to test the 20 EMA, and the entry for that trade was here, and the exit was here. And that's what I want for you, and it's a question of practice, this. That's all it is. It's a question of practice. Let me just have a look at this. This is a buy trade in. You can see that the candlestick looks almost identical in reverse to the sell trade candlestick, or the bear candlestick that we just looked at. So this is a buy candlestick in perfect position, price wavering along by the river of value, ready to go up, and it's just a question of timing. And before price exits a trading range, it normally heads off in the other direction and then goes up. This is such a good candlestick as a signal candlestick, because look at the size of the tail on this one. It's big in comparison to the body. The overall size of the candlestick is small, and it finished and closed above the 20 EMA. So this is an EMA 20 bounce trade, and that candlestick there opened red, went up above the 20 EMA. So the stop was down here, the entry was just as this went green, and the exit was at the end of the candlestick. I could pick out thousands of these trades and show you each one, but that's the type of candlestick that we're looking for. I spent 10, 15 years looking through charts to find out, where are these candlesticks and is there any consistency in where they are? And I found that there was. And that's what I teach. So, I hope this is ringing bells with you guys. I really do. Here's Tesla, another US stock, and here's the trade. So again, EMA 20 bounce. The price came down, went back up, came down, went back up. And that's perfect, because that's touching the 20 EMA. Fairly small wick on the candlestick. Entry is when the candlestick goes red, and exit is at the end of the candlestick. So there's no messing about with this. We're not exiting halfway through the candlestick. We're not, going out at break even. This is at the end. These are definitive rules, and they keep trading simple, and that's what I want to do for you. So you can see with this one, there was a price change of 121 points within here. And so, the price opened at 21,414, which is here. Your entry would have been around about 21,400, something like that, and the close was 21,293. So over 100 points within there, and this is the 1 minute chart. Within a minute. Do you think it's worth learning this strategy? Honestly, do you think that it's in the price? This fulfills all of the criteria that I look for in trading. There has to be, for the human brain to understand, there has to be context, there has to be content, and there has to be confluence. Think about the duck test. If it looks like a duck, sounds like a duck, and walks like a duck, and swims like a duck, then it's a duck. It's probably a duck, and that's what we're looking for. We're looking for that type of confluence. We're looking for all the signals to tell us the same thing. And that's the type of candlestick to look for. So, they turn up these on any chart. This is the Dow. So, Nvidia, Tesla, and the Dow. The only difference is the length of the candlestick in the number of points, which is lower on most of the indices, and certainly a lot lower on things like Forex. I really hope this is starting to resonate with you, and this is what I do. So do subscribe to the channel, make any comments or ask any questions. I'd be delighted to answer them, and I'm here to help you. So my name's Anthony Beardsall from Excellence Assured Trading Academy, here to help. Give me a shout, and I'll catch you on the next video. Cheers for now. Bye.